Revolve Renewable Power is a developer and operator of distributed generation and utility-scale renewable power projects in the US, Mexico, and Canada. CEO Steve Dalton is here to discuss the company's financial results for fiscal Q3 2024, ended March 31st, which showed strong growth in revenues and progress on project development. I'm Martin Gagel with Market Radius Research. It's Thursday, May the 30th. Please remember, this is neither a recommendation or investment advice. We're here to learn about the company. Steve, good to see you again. Congrats on a strong quarter. And please give us some highlights on what's been going on.
Yeah, thanks, Martin. Good to see you. Yeah, I guess really happy with the results we put out today. I think, strong performance on the revenue side, 65% increase kind of over the same period last year. And I think it's a kind of reflection of the strategy we've been implementing where, we can now report revenue coming from a number of different kind of streams, if you like. We obviously closed the Wind River transaction during the quarter, so you're starting to see the first revenue flowing through from, particularly from the Box Springs wind projects based in Alberta. We have revenue coming off our DG portfolio, which, like we've spoken about on some of these calls previously, and we're continuing to add projects to. And then we have revenue coming through from the sale of development rights, which was the NG transaction, which obviously most investors will be familiar with who are following the company. So, we're really happy overall with where the quarter ended up. Obviously, still a lot more work to be done, and I think again that's reflected in some of the updates that we provided, where we're making progress on the development side. We've got some other projects under construction, and we continue to look at other potential bolt-on M&A opportunities as well. So a huge amount going on in the business, and overall pretty happy with the results we put out.
All right. I noticed with the Wind River acquisition closed roughly halfway through the quarter, so only half of those revenues were recognized in your Q4 will be the first quarter of full recognition of the Wind River financial benefits, right?
Yeah, that's exactly it. Yeah, so we closed that deal kind of mid-February, so you've kind of got 6-7 weeks of kind of revenue flowing through, but it does show kind of the difference that these kind of acquisitions that we're doing will make. But you're right, we'll start to really see the benefit quarter on quarter as we start to go forward.
And then I think the other notable thing out of the quarter was that on your project development side, you've completed one interconnection agreement, and then you're expected to get another one here shortly, and then you'll be in the ready to build status for those two projects within the next 12 months. And these are pretty major value creation milestones for the projects. They're substantially de-risked when you get those milestones complete, right?
Yeah, that's exactly it. I mean, every kind of step and every milestone you hit along the development kind of process, is creating kind of value. And we may have discussed it before. Like, you kind of have two ways to kind of create that value. You can sell the development projects, and like we have done that, pretty successfully over the years. Obviously, the NG transaction is an clear example of that. But I think what we've said pretty clearly is we're more interested in being an owner and operator of these projects for the long term and creating that kind of recurring revenue base. The Vernal battery storage project and the Primus project, which are the two that you refer to, they're the two that we really feel that we can actually execute them ourselves and get them constructed and financed and own them outright, if you like, for that kind of long-term recurring revenue. So, pretty happy with progress that we've been made. The signing of the interconnection agreement for the Vernal project was definitely a key milestone. We're pretty confident of getting that ready to build over the next 12 months. We have some permitting work to complete. And I think the next big catalyst for that project will be securing a commercial offtake for it, and that's something that we're working on at the moment. And then on the Primus project, it's probably around 3-4 months behind Vernal in terms of the interconnection, but we're getting towards the end of that process. We're almost 2 years into development on the project itself. And the next work streams, if you like, attached to it will be getting into the detailed design and finishing the permitting again. So I think we're on a good track on both of those projects. That certainly within the next 12 months, we'd like to have them ready to build. And then subject to that commercial offtake kind of solution for both of them, we could see these projects in construction next year, which would be, pretty significant for the company for sure.
Do to get an offtake or a PPA on them, do you need to get to the ready to build stage first before you can sort of finalize that deal, or can you get it done, negotiate the offtake prior to the ready to build status?
No, you can negotiate it beforehand. I think for us, in terms of like why we haven't maybe progressed that up until now, is we really wanted to get visibility on the interconnection. Interconnection is such a huge issue now in the US in terms of one, finding areas that have interconnection capacity availability is a key one, and we spoke about that, I think, in some of the
Yeah.
material we put out.
And sorry to interrupt, but that's a major issue and a real it's slowing down a lot of project development to the whole interconnection issue. There's so many projects, the grid is struggling a bit to connect all these new power projects on, and so that's an issue really affecting the whole industry, is it not?
Yeah, I mean, it definitely is. I mean, it's no different than like you've had a clear signal to the market over the last 4 or 5 years that, the world wants to move to more renewable power. So guess what? There's a lot more renewable power being developed, and, the kind of processes and systems have to kind of adapt around that, and it depends where you are, and where your project is located, that some processes are better than others. So, if you take the Vernal project, I think actually we've come through a pretty, I wouldn't say quite seamless, but a pretty good process there, where within kind of 18 months, 2 years, we end up with an interconnection agreement. So you're not talking about 5, 6 years having to wait for it. So that's a key thing we're looking at now when we're trying to develop new projects is, what does the queue look like, what's the capacity look like, what's the process involved in getting connected. But I think in terms of these two projects, we're kind of at the back end of it. Obviously, with Vernal, we're obviously through it. With Primus, another 3, 4 months we'll be through it. So we're now into actually that kind of final leg of executing the projects, which is down to, like I mentioned, the kind of detailed design, finishing up the permitting, with a view of getting ready to build. But it is definitely still an issue for the industry in general.
All right. So if you want to develop these projects yourself, how capital intensive are how much do they cost? And like these power generation projects, it's not just equity. There's a lot of project financing and debt. So only a portion, you only need to provide a portion of the capital for it. Can you give us some details on sort of ballpark what order of magnitude capital could be required from you?
I mean, it really does depend project by project, Warren. But I think in general, you made the point well there. Like, if you look at, well, at really any of the kind of developed markets, I mean, you have a fairly well established and fairly deep pool of capital in the project financing market to finance these types of projects. You also have obviously the tax equity market in the US now coming into the Canadian market as well. And they can, again, you need to look at project by project, but certainly they can take up 80%, maybe more in some cases, of the capital required to get these projects financed. So they can do a lot of the heavy lifting on the capital side to get the projects into construction and operation, which leaves developers like ourselves with a much smaller part of, if you like, the equity to finance. But I think in terms of our strategy, the focus is, if you look at either of those projects, you're really talking about adding 20-year contracted revenue or long-term revenue, which will be pretty sizable in comparison to, let's say, just what we've reported this quarter.
In the Canadian market this week, there is a peer of yours got taken out, UGE, got acquired. Is there a lot of acquisitions going on in the market right now? Can you give any sort of commentary on sort of what this means for you and a relative valuation or anything like that?
Yeah, I mean, it's hard to comment on relative valuation. I mean, I think people can obviously look at the story themselves and see the kind of the premium that's been paid over where their share price is traded. So I think that's certainly interesting from our point of view when we look into that. I mean, again, I think we may have discussed it before. Like, certainly my strong view is we're undervalued relative to where we are, and particularly where relative to the deals that we've done and what we've delivered. But it certainly seems to be a bit of a recurring trend, or at least a trend that's getting a bit of momentum. Like, I think in the last couple of weeks, and even this week alone, there's been a number of other similar type transactions that have been completed in the European market. So it's certainly an interesting one, and one we'll be digging into in a bit more detail.
All right. And you have your, like the Wind River, you have your own M&A strategy. How does your pipeline look? Does it look like things are heating up, like asset values are increasing, or what does your M&A pipeline look like here?
Yeah, I mean, like obviously we're at the other side of it, where we're out in the market trying to actively acquire projects. We still see a huge amount of opportunities there, where the projects under kind of 30 megawatts which is where we've decided to focus our attention. There's still quite a lot of projects in that kind of range, that are either looking to be sold or are being actively sold by developers. So we see a lot of opportunities. We're mainly focused on the US and Canada, and mainly focused on projects that are either ready to build or in construction or operating. So our strategy really hasn't changed, Martin, and we've got fairly clear views as to how we value the assets. We don't really go beyond that, regardless of what the market's doing, because at the end of the day, we want to be delivering good value-added projects to our pipeline, rather than kind of chasing a market one way or another. But I think in terms of the acquisitions that have happened, that you mentioned, let's say UGE and others, that seems to be more focused on development, UGE maybe to a lesser extent, but there's certainly a big development component to those, rather than operating assets, maybe where we're more focused.
Right. And in terms of coming news flow, you hopefully are going to be completing an interconnection agreement. You didn't, I believe, news release the last one, so you give those as updates on a quarterly basis. And what other kind of news flow or milestones do you expect to hit over the next quarter or couple of quarters?
Yeah, I mean, again, hopefully we've kind of communicated them pretty regularly enough for people to understand. But I think what we've said is, we're still expecting the next milestone for the Bouse project sale to be met. I think we'd indicated timing of H1 this year. So, we're sitting here in the May. We're still sticking with that timeline. I would definitely think investors should be keeping a strong eye on the Mexican market. And again, this has been a consistent theme that we've said over the last few quarters, that the Mexican market is definitely looking more interesting. We're seeing more activity down there. We're seeing more interest from industrial companies on the PPA offtake side. We have 500 megawatts down in Mexico, which are kind of mid to kind of late stage development. We've been working on for a number of years. So I think we're really well positioned for what we hope is to come in the Mexican market. And then on the DG side, I think certainly we'd like to be doing more, but we have projects under construction. You're going to start to see news through those projects once they start to get commissioned. We have an active pipeline on the DG side that we're looking to add more projects on as well. So there's a lot going on across the whole business. We spoke earlier about some of the development milestones on Vernal, on Primus. They're all ahead of us within the next 12 months. And then hopefully we can manage to execute some more of these kind of M&A opportunities that we're looking at as well, to throw on top of that. So it's as it has been for the last 2 years, extremely active, a lot going on. Very clear plan, fairly clear strategy. It's just a case about step by step, delivering on it.
Excellent. All right, Steve, thanks for the update. Appreciate that. All the best, and talk to you again soon.
Appreciate it. Thanks, Martin. Talk soon.